Good day. It is Tuesday, the 16th of May. I am going to look at stock indexes and metals, gold and silver from a big picture perspective, and some FX and the dollar. I have to say though, I think most of the market at the moment is more about politics really than economics. And we have a lot of event risks. The main one, of course, is the debt ceiling. And there are talks today. I don't think it's going to get fixed straight away. And if it doesn't, then Biden leaves the country and goes to the G7 summit in Hiroshima for the rest of the week, which kind of delays any resolution of the debt ceiling, which is making the market jittery. So we need to watch out for that. Obviously, a resolution of this debt problem would be very bullish for risk assets initially. But as longer that drags on, the more nervous the market could get. And with very little kind of on the economic calendar, particularly for the US, it kind of brings focus to politics. We do have retail sales. We have a lot of Fed speakers. We have Canadian CPI today as well, so big news for the Canadian. This morning early in the UK we had claimant count change, which is unemployment jobs number, and that jumped 53%. So it went from a monthly figure of 31,000 to 46,000 new claimants. That's a major sign of weakness in the labour market in the UK. And we also have average earnings index, which is the 3-month moving average figure, and that showed really steady last month. This month forecast at 5.8%. So that's the wage inflation in the UK, so that's not coming down. Now wages going up less than inflation doesn't add to inflation, but it doesn't help inflation go down. So we've still got a lot of really bad inflationary pressures in the UK. So that's the news that I'm watching out for today. Let's get to the charts. First off, let's take a look at stock indexes and where we are. There is a lot of talk at the moment in the news about Druckenmiller. Stanley Druckenmiller, he obviously was the famous guy for shorting the pound. People have been paying attention to him forever. He said he had a high but the reports of what he said don't seem to relate very well to what he actually said. He said he had a high conviction short dollar position, but that wasn't actually true, because on May the 9th he said, I don't have some massive short dollar position. I may have been a little misinterpreted. He said he is short, but he doesn't know how long he's going to stick with it. The market is also talking about his long in Nvidia, which I kind of really do like. I think Nvidia is a really nice, trendy chart. He said on gold and silver that he owns gold and silver right now, but he could be wrong. Don't go out and buy gold. I could change my mind in a week. So we want to be pretty careful. The main thing for me is what he said about how difficult the market is at the moment. He said, I've been doing this for 45 years. I have to make economic forecasts for a living, and this is easily the most challenging period to have a confident forecast that I've had in my career. And I have to agree with him. I feel, for me, there was a period at the end of 2011 when the market went sideways, and it was very difficult which way next. It was here. Have we made a 3-wave correction? Are we going to keep going down? Or are we going to go up? That was very difficult. 2015 was a very difficult, choppy year, sideways for the whole year. But this is easily harder than that, and for all assets. Now, my monthly view of the S&P, there's 2 ways I think that we can, I'm just trying to turn off the notifications on my phone. There we go. There's two ways I think that we can look at this, and the way a lot of people are looking at this. Big picture, I think that we have possibly completed 5 waves up from the low that we made after the credit crunch in 2009. But one thing about wave 5s is that they can very often extend a long way more than people are expecting. And so for me, although it looks like, and a lot of analysts are counting this as wave 5 complete, and we're going to see, you know, this massive pullback to the bottom of this previous wave 4 here, I think that there is a possibility that all we have done is wave 1 of 5. So at the moment this looks like 1, 2, 3, and then we did this irregular 4, and this was maybe 5. I think that this may be 1 of 5, and we're doing 2 of 5, and we're going to see new highs, and we're going to see one of those choppy ending diagonals wedges. And the reason I've put this lower is because if this is one of those ending diagonal choppy overlapping wedges, the most common retrace of this wave 1 swing is a 786. So from here to here, that would mean down to 27.53. So the bullish idea is we go down to 27.50. And the bearish one, if the bears are right, is that we're going to, you know, rally and then roll over and come all the way back to these lows. Now, the more bearish view that this has completed a whole big sequence, means that we could rally all the way up. We could double top. We could do anything like this. We could go a lot more further than where we are now, and still, you know, do this horrendous drop. The more my more bullish view that this is a wave 1, 2, 3 means that we are here in a B wave in the middle. So when I look at it like this, and I'm a zigzag person, I'm always looking for equal swings. So I think that here, if this, I'm right about this, this is 1, and what we've just done here is an ABC. And why I like this ABC is because see they're bearish because this is 5 waves down, okay, but why I like this ABC is at the moment, if we measure these swings, these two legs are equal at 41.79. This is also 50%, so we've gone 50% down, rallied 50%, and so there's a lot of, you know, uncertainty. Now if I'm right about this, and so we've gone A, B, C, and I could be wrong. I'm always open to being wrong, and I'm always looking at what would tell me that I'm wrong. I think clearly breaking above these highs would say I'm wrong. 41.79, so basically 41.80, 41.79.99. A break above there. This is an S&P cash chart I'm looking at as well, by the way. So, but they're very similar, so don't. It's the same. So a close above 41.80. I think that we could see 43.67, and more likely from here 786. And I'm probably wrong about this being an ABC correction like this, but I wouldn't rule it out. 43.67. We could still do that. Okay. Now, if this is complete here, so if this is complete and this is a first swing, as long as we don't make a new high, I think we could roll over from here. We've gone sideways. This is a weekly chart. We've now gone sideways in what looks like an expanding or even a diamond pattern in the S&P for, gosh, 1, 2, 3, 4, 5, 6, 7. This is the 7th week. So let's look at this. What do I mean by a diamond pattern here? Here it is. We're looking at it like this. Go from that high. So if we do make a diamond pattern, it's going to end up being something like that, I think. And then this is a maybe. So we could go a little bit further here on this daily chart. I think that this looks pretty bullish here. We've had a bounce, and this looks like a little bit of a bullish flag. If I look at it on the hourly, you can see what I mean. So we have got room to go a little bit higher, but only a close above 41.80 would make me bullish that this consolidation pattern has broken to the upside. Okay, so 41.80, which is here. So if we just do a 61.8 from this swing here, we're looking at 41.64, 41.80. So pretty clear resistance zone still. And if we fail there, I think that we could see another swing lower, kind of relative to this one. So we go A, B, C. I don't know how far down that will go. It either goes 61 or whatever. So big picture in the SP, this is very hard to read. And there is a real risk here that, let's take all of this stuff away. There is a real risk here after this first swing lower that this rally is a B leg, and we will, no matter what, see another leg lower. Now, if we're lucky and we stay in an uptrend, we'll come all the way up here. We'll do a 61.8, carry on. If we're not, or if we were to, so on any downside move, right, our important kind of monthly level is going to be this big 236 fib level. If I go to the 3-month chart, you can see from the lows, and I've gone all the way back to 1930 for these lows, we're holding this 236 fib level, 36.82. I think a close underneath that 36.82 obviously sets us up for that, 2000 and, whichever way, 2,700, maybe 2,400 if we do back to the bottom of this wave forward. So, if we do retest the lows, or if we do take a sharp turn lower, 36.82 is where we are really kind of, we don't want to get stuck underneath it, let's put it that way. There is the potential, with this debt ceiling, that this happens. So eventually it is going to get solved. It's just how much damage are they going to do before that happens. So let's take a look at some of Druckenmiller's ideas. So first off, let's look at gold. I like silver, so this is why I've been spending a bit more time on this silver chart. Let me take everything off. This is a 3-month chart of gold. Now, anyway you count it, I think that we have done a big wave, 1, 2, 3, 4, 5. And so from the 2016 low, I think that we're in a wave 5, or potentially, remember, a wave 1 of a bigger wave 5, but we're going to be looking for 5 waves up. So here from this low, monthly, 1, 2, 3, 4, and we've clearly, for me, finished wave 4 with this big ABC correction, which is very similar in timing. Look, from this wave 2, it's everything you kind of want. So if you measure how long wave 2 took in time, you can see that from this high here, remember, because these corrections, very often they're equal in time if they're not equal in price. So when we look at the timing for this wave 4, you can see this was the high, this was the low. This lines up perfectly with the low here. So I do think that this big wave 4 that we're in is over. The problem is that wave 5 sometimes get truncated, and what we've got here is a marginal new high, and we've seen a lot of sharp profit taking. Let's go to the monthly chart. I don't think any way you count this, we can say, well, we've got 5 waves up here to finish. So a truncated wave 5 in gold would be pretty ugly at this point. So I'm thinking that this holds support, and that we continue higher, and that continuing to buy pullbacks in gold are quite a nice idea. At the moment, of course, we really haven't got our pullback. We're a little bit here on the weekly, we're a little bit oversold, waiting for it to come back. And on the daily, sorry, overbought. On the daily, potentially, we have got a nice buy. We've pulled back to the daily 20 moving average. We've pulled back to this previous low. I think that we've pulled back to potentially short-term fib support here. We're sitting on the 61.8. Could we squeak a little bit lower here in a bigger ABC correction? Yes, we could, but I think that buying long setups is favored in gold. And if I look at this, here we are. Remember, at this 61.8 level, at the 4-hour 200 moving average, potentially a little double bottom, but it's not a bullish setup yet. I'm waiting to see if it does, because, you know, we could come all the way back down here in a bigger correction before we go up again. So I think if we start losing these lows, then, you know, we can talk about a bit more trouble in gold. Very difficult level then at these previous highs, but I remain bullish until otherwise. And where do I think we end up? I think we end up in gold at least at 21.58, but my big target is 24.60 on the upside. Sorry about the dog barking. Okay, my more favorite chart is silver. Okay, he's going, so that's good. Because when I look at silver, and here's, take everything off, put regular candles on a monthly chart, I don't see the same kind of fifth wave thing going on. And from this low that we made here, I see one sharp, impulsive looking rally, followed by a 3-wave correction. So even if this is 5 waves down in silver, and all we're doing is an ABC correction, I think that we've got another, you know, silver still owes us another leg higher. So if this is our first wave higher, and here's our 3-wave correction, we should be looking to buy pullbacks for a retest of 29.50, which is where we would have ABC, and this is a 61.8, and a retest of this 50% retrace level. But more likely, you know, I think we should see maybe an equal measured move, and we should really be looking for another swing higher from here and buying pullbacks. And when I look at this on lower time frames, quite like how we've got 5 waves up here. And so now I'm looking, you know, whenever you've got 5 waves up, you're looking for 3-wave pullbacks. We've broken a double top in silver, which normally means that we are going to head down to 22.9, which that would be the double top target. 22.9 is also 50% of this most recent swing. So although I think we could find some support here around this 50 daily 50 moving average, I worry that this is not finished going down. So I'm looking for a little bit lower in silver, 23, or basically 22.994. So could we bounce from here? Maybe this, you know, this would need to be a double bottom here. So I'd be wrong and we're going up again. Obviously, if we break these highs, we've got a sideways range here on the hourly. We've got double top, double bottom, and I'm waiting to see which of these breaks. I think if it breaks higher, it's not a bad idea to be long of silver. But if we break lower, I'm looking for that 22.9 level to buy, and hopefully A, B, C, 5 ways down, we should be finished. So silver I prefer over gold at the moment, just because it's looking a little bit toppy, but silver definitely owes another leg higher. Okay, let's take a look at the dollar index, because yesterday we are still stuck in a sideways range in this dollar index. We got above the daily 50 moving average, which is pretty good support and resistance we can see, but we failed to hold it as support if we were going to keep going higher here, which puts us potentially in line for a bigger correction. If I measure from these lows at the moment we're trading underneath the 236 fib level, which is not a good look. If I put it from this low though, potentially we are at some support here for our 20 moving average, previous highs, and this 236 fib level. We're having a peak underneath it. But as long as we don't close underneath it, potentially we could see a bounce from here in the dollar, and a bounce would mean a bigger pullback in risk assets, bigger pullback in Bitcoin, and so on. If we keep going higher. If we break down here, though, I think that we could see the bounce continue in risk assets. So silver, which we just looked at, is very sensitive to the dollar. So what, and so is gold really. So what happens here in the dollar is going to be quite important. In currencies, for example, this Eurodollar, when we looked at this Eurodollar on the monthly, we said that this was important support here at 1.08 monthly 20 moving average, back tested this 50% fib level that we got above. Now if I hide this for a second and we zoom out here, from this low in 1984 to the high that we made in 2008, we bounced from a 61.8 fib level. That means that if we get above this 50% pivot level, which is our 108.4 important support today, we are likely to bounce higher to this 38.2. So this 50% level, which is today's low, is a really important bull bear line. It's also daily 50 moving average down here. And we're bouncing from it. You can see if we look left, important support here. Sideways support when we tested it on the 10th of April. And so, you know, I'm staying pretty bullish the Eurodollar, which means I stay bearish the dollar unless we break this 50% level at 1.084. So this is holding this support here is good news. But are we going up again yet? It's not clear, is it? Let's put fibs on from the high. We're sideways at this 236 fib level. We really need to get above that if we're going to be going up. That's at 1.09. So 1.084 is important support, and today's high 1.09 is important resistance. I don't honestly know which way we're going to go. I need to line this up a little bit better. 1.0989. So basically 1.09, and this low is really kind of key resistance. If we're going to see more upside for the Eurodollar, that would mean more upside, more downside for the dollar index. Key resistance. What is more important, so the pound got sold when we had that really dire employment news today. But if we look at this on the monthly, remember that inflation data is more important. Here's our monthly 20 moving average support here in the pound. When we drew this earlier, we said 50% of this green candle would be the support level. That's where we dropped down to on the daily yesterday. Lovely bullish reversal. And here we are back above the 20 moving average. I wouldn't be surprised at all if the pound continues to rally from here. From now, it looks like with this sharp drop here on the 4 hour, that potentially is an inverted head and shoulders pattern. I'm going to put my Heikin-Ashi on, I'm going to go to the hourly, and I'm going to put my fibs on and see where that troublesome 50% level is. And see if we get above that, because if we do, then I think that we've got a pretty nice long potentially here in the pound. So looks good, doesn't it? If this is going to fail though, watch out at 1.256, and I'll put the 61.8 on. And we'll see where our equal measured move is, if this is just a bounce and not the new upswing. Yeah, that 50%, let's call it 1.256 then. If I'm wrong, that's where we'll fail. And if we blast through it and it becomes support, potentially new upswing in the pound. If I go back to the 4 hour, the risk here is, of course, that we just do this. We do another leg lower before we go up again. We could, you know, previous high, we could do this in a bigger ABC before we go up again. But I am bigger picture bullish the pound. And as I said yesterday, I kind of really like the pound yen as a long setup. That's given us a nice pullback entry here. I think we're setting up a nice hourly buy after this pullback. And I think that this correction is over. We're holding the 236 fib, looking for another swing higher in pound yen as well. So we're going to retest 171.8, and then if we can break above it this time, as I said, I think we go to 200. So watching this one closely as well. Long pound. See if the dollar, see what happens with this key dollar support. I think that that's so important for so many risk assets. I'm just going to take a quick peek at oil, which is very tricky sideways price action here on the daily. This is another one like silver. I think oil owes us another leg high. It's easy to be bearish, but potentially we should see another leg higher here in oil. It's just, have we come back enough before we go higher? Sideways, dead flat for our moving averages. We would need to see this 50% and then in a little continuation inverted head and shoulders pattern to be bullish for the next leg higher, and the target is 76. And yeah, if we go more than, if we make a new low, then still in a downtrend, obviously, in oil. But yeah, this choppy sideways moving price action might give us this inverted head and shoulders pattern and a nice one more bounce higher in oil. Remember, any kind of mess in geopolitics sends oil higher. The bearish news for oil has been the news that the US government are gonna fill up the strategic petroleum reserve, but they're really not buying very much. I don't think it's gonna move the market. Let's take a look at Nvidia, which is Druckenmiller's. This made a very nice, at the weekly 200 moving average, very nice head and shoulders pattern with a sloping neckline, and it's broken higher. What I like about this, I've got my fibs from highs to lows. If we look at this on the monthly, I think this is set to retest the highs, and maybe we're on our way higher again, but we're going to go level to level when you're buying this. And we're late cycle, or you're late to the party. Where, let's face it, when you look at this daily chart and we see how far we've come, we are pretty late to the party. But this to me looks like a little bit of a bullish flag, and because these fib levels have been so well respected, I think 296 is where I would be watching to see if we get a bigger pullback in Nvidia. So this is really not a swing buy here. It's really only for short-term trading. There we are. There's our breakout. There's our target. So, I'm talking about, by that I mean short-term trading, 15 minutes or whatever. So that's his other big pick. So gold, silver, Nvidia, some of these other tech stocks, because the Nasdaq. So we talked about the S&P, right? And the S&P being stuck underneath major resistance. The Nasdaq, however, is not quite in the same position. This is a daily chart of the Nasdaq. This was the high in November 2021, the low in October 2023. And look how, if I put the fibs on from highs to lows, how these fib levels have been respected. Big pullback from the 23.6. Big pullback from the 38.2 back to the 236 fib. The 38.2, when we got above it, is now support. So it's kind of no-brainer resistance, isn't it? This 50% level and this previous high from the last 5-wave swing low. So somewhere between 13,626 and 13,700, and we're not quite there yet. So this again has more upside. Fifth waves though can become quite choppy and overlapping, and but I think that this is a wave 1, wave 2, 1 of 3, 2 of 3, 3 of 3, maybe a short 5 of 3, pull back to this low. So as long as this low holds, we'll still be looking for a 5th wave, and it kind of comes from this level here as well. Let's look at it like that. Still looking for one more push higher in the Nasdaq to finish. Now, Canadian CPI, we've got Canadian. Let's take a quick peek at the Canadian and Australian stock indexes, because this Canadian stock indexes still looks pretty bullish to me. Let's take a look at the daily. This again, I think we've got a wave 1, 2, 3, 4, 5. If we upside target is 20,889. It's just, are we going up again yet? Here, I think we might be. So we've gone 1, 2, 3 down, 1, 2, and hopefully this is a strong wave 3 today. So I'm looking for a really nice bullish bounce here. If we can break out of this consolidation in the Canadian TSX and a nice 4-hour buy, target 20,900. We take a look at the ASX as well. This is not quite such a happy chart. It's sideways, really frustratingly sideways. Now, from this high to this low, we rallied to the 786 fib. Initially, the 61.8 held as support, and it's now resistance. I think we are owed in this Australian index another leg lower, because our minimum target should be down to the 38.2, which is down here at 7,100. So I'm not saying that this is really, you know, in a correction. To be honest, we could go higher here, but I'm not seeing a bottom yet. I'd like to see this 1, 2, 3, and then one more. So that means if we do break above this resistance, we need to be very careful at the measured moves. So if I measure low to high, project it from here, 73.61, 72.96 and 73.61 would be the two levels I'll be looking at. I'd like to see it ideally there, and then we would have an equal move like this, wouldn't we? So we could break above resistance, but I'm not sure it's a bottom yet in the ASX. And 73.61 is going to be important resistance if we break higher above 72.75. Okay, quick look at the DAX and the FTSE, and then we'll see where we are at. And I will come back with Bitcoin. Now, weekly DAX. This is such a bullish chart, isn't it? Here we are back at the highs. Let's get rid of this. Tidy up everything and put regular candles on. In fact, I'll look at this on a monthly. So the bullish argument here in the DAX is that this from the 03 low here, 1, 2, 3, wave 4, and win wave 5, and this kind of makes me more favoring that S&P count where we've just done wave 1 of 5, or about to do wave 3, because this is looking really strong. Now, if I'm wrong and this is wave 5 finished, then we're not going to make a new high, and this is A, we're going to do B, and then we're going to come back to these lows, bottom of wave 4. But if I am right, and this is wave 1, 2, and we're making a big strong wave 3, let's see how we can count this. Now, whenever I'm not sure, and I'm not the world's greatest Elliott wave counter, I put fibs on, high to low. If we go, for me, if we go beyond the 886, I'm looking for a retest of the highs. So if I do this here, take these other levels away, then we are above this 886, and so that should become support. And 2 weeks ago, when we tested it, it was. So this is our key trend support, 15,767. As long as we stay above 15,767 in the DAX, still looking for a retest of the highs and maybe new highs. We are likely to see some profit taking when we hit this previous double top here at 16,274, but I'm certainly not bearish at all. There's no reason to be. I also think when I look at this shorter term count here, we've gone this is a daily, we've gone 1, 2, 3, I think this is, we're in a wave 4, and we've got one more swing higher to retest those highs. So I'm still bullish. I'm still looking for one more push higher. I'd like to see this break out from this consolidation, and 16,274 is the upside target for the DAX. Just waiting to see. At the moment we're sideways. There's a lot going on in the world, and there's a lot that could go wrong, but we've got 5 touches of this trend line here. If this breaks higher, that's our target in the DAX for another swing higher. And we could say, well, here's our first swing, here's our second swing, that gives a lower target, but that's what I'm looking for in the DAX. Obviously, if we don't break out, if we stay bearish, we could look for a retest of the lows, and we're going to do a bigger, correction before we go again. So bullish consolidation. It's not a breakout until it actually breaks out. This is a 4-hour chart of the DAX. It's not quite really a buy yet either. Everything has gone very quiet. Okay, I hope that's useful. I will come back with a crypto update.